Welcome to Business Middle East. In this edition, we look at how the pound has been affected by the election campaign in the UK. And in Business Snapshot, we discuss the impact of the ending of the Saudi-led military operation in Yemen on international oil markets. The uncertainty over the political situation in Britain ahead of the forthcoming general election has raised concern among investors and unsettled sterling. Uncertainty that's likely to persist until the outcome is known. For an understanding of what's going on in the UK, our election correspondent Joanna Gill compiled this report.
For investors, or at least those who are risk-averse, the UK voting day of May 7th can't come quick enough. The pre-election period has been marked by jittery markets and a slide in sterling against the dollar. The pound is now at its lowest level since 2010, having dropped around 5%. Uncertainty over the various potential outcomes is seen as the main factor. But despite the decision of the Bank of England to keep interest rates at 0.5% in place since 2009, and signs of strong growth, analysts believe the UK economy is still fragile, which could be reflected negatively in sterling in the coming months. At a time when the competition is heating up between the various parties in the UK ahead of the elections, the markets are also waiting for the results that may lead to the stabilisation of the pound, which has been under pressure this month, making it fall against the dollar.
For more on this issue, we're joined now by Noor Eldeen Al-Hamouri, Chief Market Strategist with ADS Securities in Abu Dhabi. Hello, Noor. The British electoral campaign is weighing on sterling's exchange rate. How long do you think that will last?
During the election period, the pound has risen, unlike the last election when the pound fell sharply. Sterling has currently stabilised at around $1.50, and this is due to the negative results of the US economy and lower forecasts for interest rates in the US. Overall, what we'll see this time is similar to the last election. Is this all going to last? Certainly yes, but if the same parties that won the last elections repeat their success in this vote, I think it will help the pound to stabilise again.
What are the potential consequences of the outcome of this election for investors in the Eurozone?
The current government has managed more or less to stabilise the economy. Growth rates, unlike other countries in the European Union, are still strong. The danger lies in talk of Britain leaving the European Union, which is terrifying investor markets, especially with the ongoing crisis and conflicts over Greece. At present, it all depends on what policies will be put in place by the government to be formed after the election. Whatever happens, the asset purchasing programme implemented by the European Central Bank is still attracting investors to European markets. And that will continue despite the current conflicts over Greece.
Thanks, Noor. Stay with us for our Business Snapshot. In our Business Snapshot section, we analyse the impact of the end of the decisive storm military operation in Yemen on oil prices. Take a look.
Saudi Arabia has announced the end of the military operation Decisive Storm in Yemen and the start of a new campaign called Restore Hope. At the same time, Riyadh confirmed that oil production was close to its record high in the month of April. The Saudi oil minister said his country has produced around 10 million barrels per day this month. The statement caused a stir in crude markets, which fear a likely consequence on the prices of black gold. Those prices have seen a huge decline this year, as shown in these figures released this month by OPEC. Analysts eagerly await the next OPEC meeting to be held on June 5th in Vienna to see if Saudi Arabia will continue with the same high output rate or if it will take additional measures to promote market stability.
So the decisive storm military operation has ended and Operation Restore Hope has begun. What are the likely consequences for oil prices?
Prices fell slightly after the end of the military operation, but began climbing again shortly after. Now they're maintaining the same level seen through April, about $57 for Texas crude and $65 for Brent. For now, all eyes are turning to an eventful month of June, during which there will be an OPEC meeting when the oil states will decide on a possible lowering of production. There will also be a decision from the US Federal Bank on whether to raise interest rates. And finally, there's the prospect of a possible agreement between Iran and the major powers on Iran's nuclear program. Investors are expecting all these events, and that's why I believe oil prices will remain low. But even if prices stay low, they will eventually start to rise again because there's no alternative to oil, at least in the next decade.
Thanks, Noor. See you next week. That's it for this edition. Feel free to post your comments or suggestions on our social network pages. Thanks for watching. See you soon.
على مواقع التواصل الاجتماعي. شكرا لكم على حسن المتابعة. إلى اللقاء.